Good morning, everyone. Welcome to Windsor Brokers live daily market outlook. Today is Wednesday, 12th of September 2012. Very important day, of course. According to today's calendar, we have the German court decision. Most likely will be a positive one. This is according to the expectations. And as a result of this already being slightly priced in, and some other dollar negative things that we're going to elaborate a bit later, the positive sentiment on the single currency continues to drive the euro higher, with the break above very important 128.30 zone. Very strong resistance extending against. We are now focusing 129 and 130.00 in the short term. This is what we mentioned in our yesterday, I think, and Monday's session, that break above this level, this important barrier that marks basically 200 days moving average, and one of the main bear trend lines sees potential now for further extension of 1.5 month recovery rally of dangerous 120 zone, and gives more prospect toward the upside for the single currency. The cable also follows the mode. 161 is in focus. Has it been reached? 160.96 we have seen so far during the beginning of early hours of European session, with the focus firmly on the upside, though some corrective action not ruled out, as conditions remain quite extended towards the upside, with the dollar slumping to its fresh highs as a result. The dollar yen ticked its key support 1st of June low at 77.65 in yesterday's extension lower. Likely scenario would be further extension of the broader downtrend from 84.17, as well as dollar Swiss breaking below 94, very strong support, 200 days moving average, and if I'm not mistaken, Fibonacci 61.8% retracement of the broader uptrend, extending to 93, approximately 93.70 zone. More prospect now seen towards the downside. Commodities remain well supported for now, as crude oil is attempting at the upper boundaries of the short-term range at 97.30-60 zone, awaiting of course the decision of today's German court, as well as tomorrow's Federal Reserve's meeting and the rate decision. Of course, the more important is the policy of the Fed, as currently quite negative data coming from the US are likely to prompt Mr. Bernanke and company to act further, and launch, most likely that will be announced tomorrow, the quantitative easing number 3. As said, the German Constitutional Court is expected to give its approval today to the Eurozone's new bailout fund, while insisting on guarantees to safeguard German parliamentary sovereignty and limit Berlin's financial exposure. The Chancellor Angela Merkel remained tactfully quiet, as the court kept policymakers and markets on tenterhooks for months, delaying the European Stability Mechanism, so-called ESM, and the fiscal compact to check that they comply with the German democratic rules. From the other side, the finance minister Wolfgang Schäuble blurted out last week he was sure of victory over the 37,000 odd plaintiffs, who include Eurosceptics from Merkel's center-right coalition and the left party hardliners opposed to European integration. If the court in Karlsruhe were to defy the expectations and uphold the injunctions against the bailout fund in its 10 a.m. Central European time, we're talking about 8 a.m. GMT ruling, it could devastate bond and the currency markets and plunge the Eurozone into turmoil by depriving it of funds to keep debt-laden southern states afloat. But legal experts believe the 8 judges in the court's second senate will back the treaties based on its previous rulings that have allowed the integration, while insisting on the full consultation with the Bundestag. This is the lower house. So all eyes are on this meeting that will, the verdict will come quite soon in 8 o'clock GMT. We're talking about 40 minutes ahead. With the positive sentiment now dominating in the markets, euro is currently steady at around 128.60 zone, just off its recent highs at 120, above 128.80. Of course, all eyes are on the German court decision, and basically the final verdict will give us, will put more light in the current situation, and if positive, of course, then it could be quite good support for the single currency. Otherwise, as I mentioned earlier, any possibility of any negative decision would be quite would have a quite negative impact in the current market conditions. And also the important is the Fed's meeting that is coming tomorrow. The United States, according to the Moody's Investors Services released yesterday, they might lose its top credit rating if next year's budget talks do not produce policies that gradually decrease the country's debt. The warning now comes 2 months before national elections that may fail to loosen the current gridlock in budget policy. The recent polls suggest that in the election, if the election were held tomorrow, probably President Barack Obama would win a second term, while Republicans would strengthen their hold on Congress. The Moody's, which gives the United States the top AAA credit rating, but with a negative outlook, said Congress needs to put the debt level on a downward trajectory to maintain that rating. If budget talks lead to specific policies that produce stabilization and then downward trend in the ratio of federal debt to GDP over the medium term, the rating will likely be affirmed and the outlook return to stable, Moody's said in its statement. But if those negotiations fail to produce such policies, however, Moody's would expect to lower rating, probably to AA1. This was one of the main drivers of the dollar lower yesterday when it hit fresh lows, and the opposite currencies, of course, have registered strong gains. Let's now take a look as we saw the main events that are actually the key events of today. Let's take a look on also on today's calendar and see what is to be expected. The CPI for August came at 2.1, slightly above the expectations at 2%. While still to come, we have Italian industrial production, and more significant is the data from UK, where unemployment rate for July expected to stay unchanged at 8%, while climate count changes for August is forecasted plus 0.1,000 at 100,000, compared to minus 5.9,000 of the release of July. Eurozone industrial production is due at 9 o'clock GMT. No changes expected to come at 0. Minus 0.6 was the release of month of June. At the same time is UK's leading index for July. We have no forecast, unfortunately. Minus 0.3 is the previous release, and the Americas starting at 12:30. US import prices for August monthly release are expected to grow by 1.4% compared to minus 0.6% of the July's release, while wholesale inventories for July are also forecasted slightly higher, 0.3% compared to minus 0.2% in June's release. And crude oil inventories for today are due at 14:30. No forecast at this calendar, but we can see it on the other one. If you give me just a second, we're going to take a look. Meantime, at 21:00 GMT, the Central Bank of New Zealand, I do apologize, will release its decision for the interest rates, and it's forecast shows unexpected, unchanged expectations for at 2.5%. For the crude oil inventories, today's forecast is a draw of 2.6 million barrels compared to draw previous week's unexpected 7.4 million barrels draw. And said U.S. crude oil stockpiles are likely to fall during the past week, in the second straight week, pressured by lower production and imports on the U.S. Gulf Coast after Hurricane Isaac, and expanded I do apologize, after Hurricane Isaac set crude oil inventories, I don't know what's wrong with me today, are forecasted to have fallen by 2.6 million barrels in the week to September 7. This is the survey showing compared to the draw of 7.4 million barrels, and as oil production in Gulf of Mexico has yet to fully recover from Isaac, which made landfall in Louisiana in August 28, and refineries are still returning to normal. And that was pardon, all for from today's calendar. So we have very close now the German court decision. That is the main release for today. Meantime, we're going to take a look at our charts and see what are the expectations and what are the scenarios in both ways of positive or a negative release of the German court. Of course, we are more focused on the technical point, but of course, in most of the times, fundamentals could be quite strong drivers of the market. As shown on the hourly chart, the euro remains in the steady uptrend. Some overbought conditions seen in this morning after hitting fresh high at 128.84, with a brief pullback already underway as the studies are starting to point lower. A larger picture is still showing the uptrend, the unobstructed, despite again quite overextended, I would say at this point, and overbought conditions on the 4-hour chart, with the stochastics now moving towards the downside, yet no signal of reversal, but most likely scenario would be some brief corrective action before ascending further, as break above, very important, as we mentioned at the beginning, 128.30, where it's 200 days moving average, and the trend line, bear trend line of 134.85 yearly peak posted on 29th of February has been now cleared, and yesterday's close above this level might be signal for stronger gains and further extension of rally from 24th of July 2012 at 120.42, with the 129.00 nearly being reached, 128.84 seen so far, ahead of 129.00 round figure resistance, and another significant 129.34 that marks 61.8% retracement of entire move from 134.85 to 120.42, a break of which is required to open 130 as the next psychological and the stronger barrier as the next upside target, as also positive studies on the higher time frames, in this case larger time frames, pardon, in this case daily, are still pointing higher, still unobstructed despite being now in the overbought territory. More focus is still seen towards the upside as the pair continues to run higher. Especially today, after the release of the German's court, we might see some more positive action, of course, in case of a positive release that is widely expected for now. On the alternative scenario on the downside, overnight lows at 128.45 is seen as immediate support, reinforced by hourly 20 days exponential moving average, while more significant support lies at 128.13 and 128.00 previous high, and the round figure support, where is also the hourly 55 days exponential moving average. At this point, any dips below 127.50 higher platform would be quite risky for the near-term price action, as this might allow for a stronger reversal. And just below this, we have the near-term bull trend line drawn of 125.00, currently at 127.37. It's better seen basically on the hourly on the 4-hour chart. If we take the latest uplift from 125.00 to today's high 128.84, then we can see that 127.50.60 and the 38.2% retracement of the entire move is at 127.37, equivalent to the trendline support. We can say at this point, if we lose 128.50, 128.30 zone, then this might be a trigger for some stronger corrective action and put immediate bulls on hold in favor of further retracement. With the 127 zone seen next, marks approximately 50% retracement, and close to this is 126.80, the ascending 55 days exponential moving average. And on the upside, yes, of course, we mentioned the break above 129 and the more significant 129.34 is to open 130 as our next target. 129.93 are the lows at 130.01. Okay, this is these are our next upside targets in case we see the sustained break. As just recall, I was not very convinced that the immediate break of this strong barrier at 128.30 will occur. If you remember yesterday, I mentioned that it might be some hesitation at this point, and I expected basically some more congestion and further sideways movements before a fresh push higher, but it seems that good fundamentals for euro that came yesterday after Moody's comments pushed the pair through this barrier easily, and now we are focusing 129 and 130 in the near term. And again, sterling following the single currency, 160.96 just ticks below 161.00, our initial target on the upside, following a brief corrective action of last Friday's highs, 160.33. That was contained by ascending 20 days exponential moving average at 159.58, and the fresh strength easily broke above 160.33 and continues to travel higher, still unobstructed by quite extended, I would say in this point, overextended conditions on the 4 and also 1 hour chart, deeply in overbought territory, with the dailies also entering the daily RSIs entering the overbought territory, yet no any signal being generated, neither on lower nor on larger time frames, keeping the upside firmly in focus. As break above 161 is to open 161.81. This is the peak of 10th of May 2012, and 162.00 seen as the next upside target in case of clear break of 161. Again, overbought conditions sooner or later would give some result and would likely produce some corrective action with a strong immediate support seen on the previous of the overnight lows at 160.63, and more significant is the previous high at 160.33, again reinforced by ascending 20 days exponential moving average, along with the 160.00 round figure support. At this point, break below 159.58 higher low of 10th of September would be indicating most likely some stronger corrective action. Otherwise, ideally, any dips that are not seen yet and not signaled yet should ideally be contained approximately at or above 160 level in order to keep the short-term bulls firmly in play and intact for extension through 161 towards our levels at 161.81 and 162.00. From the other side, dollar yen lost ground again as break below important support and the base at 78.00 zone as the pair ticked it once at last Friday, and brief recovery was short-lived, limited by initial resistance at 78.30. Fresh weakness accelerated by yesterday's U.S. rating comments extended the losses so far to 77.69, just ticks ahead of our key support and low of 1st of June 2012 at 77.65. Most likely this will signal the end of 3-month consolidation of the down move from 84.17 yearly high that was capped at 80.61, peak of the cycle at posted on 25th of June. As the downside comes under increased pressure, now break below 77.65 is expected to open a fresh bear phase as a part of broader downtrend from 84.17. Pardon. Actually, it's to open the third wave of this descent, as the second one was seen rather consolidative than corrective, with the 77 level seen as the next target, and the extension, as if we lose, basically if we lose this quite strong support and base at 78 at 77.65 that has already been cracked, then 77 would be the next target ahead of possible extension down to 76. It's a low of 29th of January 2012, and basically this is the low of 2012, and another risk is seen towards 75.56, which is historical low of dollar yen posted on 30th of October 2011. Back to the short-term outlook, a brief bounce seen on the oversold hourly conditions. The late hours of yesterday's trading was triggered by, as said, oversold. Conditions so far showed not significant results. 77.96 was seen ahead of 78.00, previous strong support, now acting as initial resistance. And basically, as long as it stays, as the price action stays capped by 78 and 78.30 seen as the next barrier, pressure and immediate focus remains at the downside. Only the gain of 78.30 might provide some temporary relief, but unless we see a gain of 78.00 and 78.80 and 79.00, not much prospect is seen towards the upside and any corrective action, as bears now took full control and driving the pair lower, of course, with the fundamentals seen as a catalyst for yesterday's fresh slide that ticked our key support and the key low at 77.65. Similar to dollar yen is the dollar Swiss that broke below, I think it's better seen on the daily chart, broke below very significant 94.20 and 94.00 support, where we have 200 days moving average and the 61.8% retracement of the up move from 90.41 to 99.70, with yesterday's close lower at 93.86, seeing more potential towards the downside. Negative tone dominates on the daily chart, though some overextended conditions and entering the oversold territory might be a signal for some a corrective bounce, yet no any signal being generated, while hourlies are in the sideways consolidative mode of its latest low at 93.77 hit last night and repeated this morning. The price hovers within very narrow range around the lows, with the hourly studies at this point in the negative territory, but moving rather sideways and the downside. Of course, more focus is seen towards the downside, as this consolidative action has so far been limited just under 94, our initial resistance, by descending 20 days exponential moving average, while the larger 155 days one currently at 94.27 maintains the recent action in past 3-4 days. 4-hour structure is also showing overextended conditions of the indicators, yet no any signal, any firm signal of any corrective action seen generated. So still more focus towards the downside. As said, 94.00, 94.30 are initial barriers ahead of 94.80, 95. At this point, I would say a regain of minimum 95 and another significant 95.37 previous low and the 38.2% retracement would provide a temporary relief and avert immediate downside risk. Otherwise, we see focus towards 93 93.66 and 93.33 previous high of 15th of March 2012, and before this, and of course 93.10 main trend line support, drawn of 89.29, low of 24th of February through 2012, and the 93.00 of course as around the figure support. As said, more focus in towards the downside, and targets 93.66, 33.10 and 93.00, unless any recovery action regains minimum 95, 95.40, that will provide temporary relief and pull the pair out of the dangerous zone. And the crude oil, as we said at our introduction this morning, is attempting at the higher levels, as weaker dollar was one of the main reasons for a fresh strength of the oil price, yet no confirmation of breaking above this short-term range. We need to see break above 97.70, these two peaks, in order to clear the way for a fresh, actually to signal fresh direction and focus our upside targets at 98 and 98.27 key barrier, peak of 23rd of August 2012. A positive structure is seen on the 4-hour chart as well as hourly. The hourlies are currently rather in the sideways mode, but the positive tone continues to dominate with some corrective action and not ruled out. Some consolidation, I would say, rather in this point, with dynamic support 96, around 96, 200 days, 20 days moving average, and then 96, 97 and 96.70, while a break, I would say, below 96 would be risky, as that will signal that the price is back to the range. Of course, a break on the upside, the 97.70 is required to signal the breakout of the range and open 98 and 98.27, with the possibility quite high, according to the expectations for today's German's court decision, that will be quite supportive for the crude oil, as the dollar will be likely pushed lower. And finally, gold. I have to mention also for all of you that we have started, it's been some time, 1-2 weeks, technical analysis, technical outlook for commodities. You can find it, if you are a client of ours, you can find it in your trading platform, received on a daily basis, pardon, or you can find it on fxstreet.com or any other related financial sites where it's distributed. I think it's also in Investopedia, if I'm not mistaken. It's quite useful. It's in written. I mean, whatever we say here, you will get it in written. Of course, when we talk, we have a bit more time and more space to describe things. But in case you miss anything, you can find the written technical outlook for commodities. That includes gold, silver, and crude oil. And as from today, we are going to launch another service. It's going to be a short-term technical outlook for crosses. We're going to pick every day the most interesting cross rates and make the short-term analysis. Again, this will be sent through to all our registered clients via the trading platform, as well as FX Street. That will be posted on FX Street, and of course they are going to do the further distribution. So we have started some new services that I hope will be for a benefit for all of us. Pardon. As said, the gold remains stable, actually, after finding a support at 17.24 yesterday. Yet upside target and the previous high at 1741.70 stays intact, but rather sideways movement seen on the lower time frames, 1 hour, while 4-hour chart studies are slightly pointing lower, and there's still see risk of some stronger corrective action, as immediate support at 17.24.30, the previous low, reinforced by 20 days exponential moving average. As said, is offering initial support, and on the downside, I would say more risk would be seen a loss of 1700 as round figure and psychological support, whereas also 55 days exponential moving average and the 1680 zone, higher platform and close to 38.2% retracement, whereas also in the near this is the bull trend line drawn of 1590. As daily studies are quite extended at this point, again warning of some corrective action is coming on from this larger time frames, as the channel resistance currently at 1740 and the previous high are seen as quite strong pressure on the upside. So any failure to clear 1741.70, 1742, the previous highs, and the channel resistance could be seen as a possible risk of a stronger corrective action, with the levels, as I mentioned previously, to come in focus. On the upside, break above these levels is to open 1762.90, which is high of 29th of January 2012, and 1790.80, the high of a year, posted on 26th of February 2012. And that was all from my side. If you have any questions, please submit them now. Okay, we have Aussie dollar. This is our standard, I think, on a daily basis. Aussie dollar, let's take a look first on the 4-hour chart. It looks quite supportive, well supported at this point, as it is now in the third wave of corrective action of 101.65, low of 6th of September, where the higher low, with the higher low seen at 103.21, where 200 days moving average contained the recent corrective action of 104, being contained at 103.21, and the fresh gains through 104.42. That is 61.8% of the entire move from 106.12 down to 101.66. Now extending gains 104.87 seen so far, ahead of 105.00 and 105.43, the top of 23rd of August to August 2012. As for our studies are already starting to point lower of their overbought territory. This could be signal of some corrective action, and basically it will not be the third wave, as the length of the third one is not complying with the rules of the wave theory. So we are not going to apply this at this point in case of reversal, with the immediate support at 104.26 and 104.00. Close to it is ascending 20 days exponential moving average at 103.81. According to the Fibonacci studies, this is approximately between 23 and 38.2% retracement, with a very significant support at 103.20. As set, its 200 days moving average, as well as 50% retracement, and basically only break any dip below this level could be quite bearish, and this will be confirming the lower top at currently at 104.87, with the hourly structure again being overextended and starting to point lower. As said, main risk will be seen on loss of 103.20. Otherwise, any other dip would be seen as corrective, ideally to be contained somewhere at or above 104 zone for a further extension higher and test of 105 and 105.43. Any further questions, please? No for today? Okay, in that case, we're going to conclude and get ready for the soon German court release that is coming in approximately 10 minutes. I would like to thank you all for being with us today, and of course expect you again tomorrow at our standard time, 7:00 GMT. Get up, have your coffee, and join us. Wish you a nice day and very good and successful trading. Good luck.